What is up, crypto land? Welcome back to Around the Blockchain here on BitBoy Crypto. As you know, it's the largest and greatest and coolest, most friendly crypto community in all of the interwebs. My name is Justin, but you can call me J-Chains. Man, oh man, do we have a great show for you. It's Friday. Markets are doing great. Everyone's in a great mood. We got a great panel of guests. Who we got? We got RiceTVx. Sometimes he gets heated. Good. It's okay. Ben is gone
sometimes.
Today. We got Crypto Stache. You could just call him Stache. Make sure that you speak it with the apostrophe. He likes it that way. We got Tom from CryptoBusy, and rounding up the group, his first time on the show, our head writer, our favorite curly-haired dude, Austin, throwing out stunners, Nick DIMONDI. What's going on, guys? How we doing today?
I'm doing great, man.
Good,
Thanks for having me back on.
Doing great, yeah. No complaints.
Absolutely. We got a great show for you today. If this is your first time watching Around the Blockchain, as you know, we've got your favorite crypto people up on here answering questions, giving us answers. If you like what you hear and you're in the chat, hit that +1, and we will give these folks some points. Whoever has the most points at the end of the show, they can leave us with some parting words. We'll give you about 30 seconds or so. So make sure that you go down into the description. Look for the links to their channels. Show them some BitSquad love, baby, because they put out some fantastic content. All right, we have got a great show for you today. We are going to be talking about JP Morgan adding crypto investments, allowing their wealthy customers to add crypto investments. We got blockchain social media adoption, and then we've got the Ethereum roadmap. EIP 1559 happened. Things are looking good. So we'll get into some Ethereum. But before we do, let's do some market watch. What do we got here? Market cap coming in $1.7 trillion. Bitcoin dominance at 46.1%. We got ETH at 19.7%. That dropped a little bit. I know it was a little bit higher this week, but what's more important is that we are getting dangerously close to $43,000 on Bitcoin price. ETH almost hit 3,000 today. Very exciting. We know that we love these prices. Everyone's excited. It's Friday. What's going to happen this weekend, though? Let's see what else we got in some crypto action. Let's take a look at CoinMarketCap. Another big notable in the top. Ooh, Polkadot number 9, 32% on the week. That's a big week. That's a real big week. All right, let's get into it. What do we want to talk about first today, boys? JP Morgan. They are adding 6 crypto investments for their customers. Now, let's see. They quietly opened up access to 6 crypto funds over the past couple of weeks. Let's see. We got 3 Bitcoin funds, an ETH fund, a Bitcoin Cash, and an ETH Classic. But according to some unnamed sources, JP Morgan advisors are not allowed to overly promote these funds. We know that Jamie Dimon is kind of, he doesn't like Bitcoin too much. Let's see. Tom, I want to start it out with you today because it's your first time on the show as well, you and Nick. Is this the reason for the Bitcoin pump today, in your opinion, with what's going on with JP Morgan?
It's actually my second time on the show. 3 times for CryptoBusy. But as always, thank you very much for having me on.
Oh, what I meant to say was my first time hosting with you on the show.
Good recovery.
Yeah. Good correction. Yeah.
Good save there. Good save. It's laughable. It's really funny, actually. 4 years ago, these banks are saying, it's a scam, crypto's a scam, Bitcoin's a scam, stay away from it. And in the space of 4 years, they're opening up trading desks. And on top of that, from the news that you told me already, is that they are not allowed to promote it or not allowed to overly promote it, which is, again, what's the reason behind that? I think what they're trying to see here is that they're realizing that Bitcoin and crypto has had this massive impact in the world, and they're just playing catch up now, and that's a very sad position to be in part of, but it is what it is. We were right from the beginning, all the way from it, and this is where they are right now. So we just have to sort of accept that and see where things take us. But it's bullish in my opinion. It's good to see this. So
absolutely, we love to see some movement going on and letting some of the wealthy investors get into crypto. Yeah. If they don't feel comfortable trading it on their own, if it's going through trust or other funds through their traditional banking methods, it is exciting to see people get into it. I know it's going to boost our market cap up. Rice, what do you think? How do you feel about this Bitcoin pump? Does this have anything to do with what's going on with Chase?
Obviously, I think it has a little bit to do with the price action, and it's, kind of inevitable that Finance 1.0, the legacy systems, are going to be trying to remain relevant. What I find, the funniest about this is all the evil hypocrisy of Jamie Dimon or prefer to call him Jamie Dimon, and all the hypocrisy he has done, talking negatively about Bitcoin, while Swift, which is owned by JP Morgan, ended up swooping up a lot of Bitcoin and manipulating the markets. It's really sad to see, but I mean, they also have to remain competitive with all the other legacy financial institutions that are allowing for Bitcoin custody and investment. And then you also got to think about these newcomers. We have Ben's favorite, the digital currency group with their Grayscale. And then we have, Coinbase and FXX. And so, I mean, you have all these newcomers coming up that could be taking the place of the JP Morgans and your different financial legacy systems. So it makes sense, but it's just hilarious after all the antics and all the things that have been said, that they have to end up offering these services to their customers. Otherwise, I mean, their customers are going to find these services somewhere else. So they had to remain competitive. So I find it to be completely ironic. It's almost like that Alanis Morissette song. And isn't it ironic?
Don't you think?
Don't you think?
Nice. Nick, look, same thing. It's pretty much the same. What I would ask you this. Do you think that now all the traditional banks, the larger banks of that, JP Morgan size, can they avoid adding crypto availability to their customers?
So here's the thing with them adding availability. They have to be, what they're navigating here is they're trying to save face, right? Because they've spent the last, like Tom said, the last 4 years poo-pooing it, but now they have to backtrack, and they have to do it to where they don't look like a bunch of idiots to their long-term, holders, long-term customers. So that's the dance that they're really trying to play right now. Have they been in Bitcoin and crypto for a while? Duh. So that's not the issue here. It's really going to be like, watch their language. I love how they use the word allow. They will allow their clients to get exposure to Bitcoin and crypto. And that's, that's classic banker terminology. I mean, look, JP Morgan Chase, one of the founders was Aaron Burr back in 1799. And as we all know, Aaron Burr shot Alexander Hamilton. And so if there's another guy who shoot another guy and not on the up and up, as what happened to Alexander Hamilton, that they're not going to be a straight shooter even now. And look, they've taken bailouts. They can't help themselves but try and get rich off of the middle class. And so what you're going to see here is you're going to see Jamie Dimon trying to make himself look like he's been the smartest guy in the room the whole time. Whereas in reality, all these guys know, Goldman Sachs too, they all know that they're playing catch up to Digital Currency Group, and they're scared to death of FTX.
They should be scared. I
love the knowledge drop, though.
Yeah, that was great.
The history, that was good history lesson.
They're bringing the Hamilton in. His Stache. So kind of expanding on what we're talking about with Jamie Dimon, how he says, I don't care about Bitcoin. It's not for him. You can like it, whatever. Do you think that's actually how he feels? Or is this kind of, his way to FUD the market in favor for him, his clients, the people that they represent?
Jamie Dimon is a crook. JP Morgan is also a bunch of crooks. These people know what they're doing, and they've been doing it for quite a few years. They were coming out. I mean, Jamie Dimon in general himself was coming out years ago talking about Bitcoin being a horrible investment, that he was going to forbade anybody who was in his, employ from touching it at all. And they were doing this to try and suppress the price so they could continue to get in at a better price. And they were probably accumulating this stuff underneath the radar without telling anybody. And so this is something you see institutions doing all the time, man. I mean, this is how they manipulate. You think they don't do this for the stock market? You don't think they do this for any other asset or commodities? Of course, that's how they make their money. They make their money by manipulating things, not only the markets, but their customers as well. So, for them to come out and say, don't push it too hard. It's only for the wealthy customers. Like, that's some BS right there. Yeah. The fact that like Nick was saying, these are companies that received bailouts from from taxpayer money. And then they're using it to manipulate markets and to favor only the wealthy, right? They're not rolling this out for everybody, are they? I don't think so.
Nope.
And so now with this new addition that they have here, what's actually interesting about this news too is that this new trust that they're allowing their investors to be able to get into, I think it's the NYC Big or NY Big Trust. This is unlike the Grayscale Trust and the Osprey's Trust, which they're already been giving to clients exposure. This one actually allows you to get in on the underlying currency, so it's not like a derivative of Bitcoin. They're actually allowing that trust actually allows the people who hold it to be able to get involved in that. So I thought that was actually kind of interesting. So they allow the clients to actively kind of participate in those transactions versus it being very hands off when it comes to the Galaxy Digital Grayscale stuff that has been traditionally in there. So no, I mean, I think that they're doing this for a reason. They're doing this because they are behind, and they're right. These other digital currency groups that and not just digital currency, but lots of other ones who have been ahead of the game and ahead of the curve, and they were doing this and not necessarily having a figurehead over there shouting at the top of the mountain, "Bitcoin is bad," like some old geezer up there, they have definitely profited because of that. So these larger institutions are behind. I don't think this is something that is actually driving the Bitcoin price right now. This is too small of news, really, for something like that, in my opinion. Any news like this is good news. I'm never a fan that more institutions are coming on board. Screw the institutions. I want to see millions of average people getting on board. That's what makes me excited. That's what's more powerful. That's what I care about. I'm not necessarily like, oh my gosh, institutional money is coming. That's great. Oh, great. Sure, maybe it's going to pump our bags, but what I really want is to see the system continue to improve, and to more individuals that really need Bitcoin to be using it, to understand it, and to have it as a store of value.
It's a great point, Stache. I've always thought and said this for years, when people said, oh, we need institutional money, you saw how bad they screwed up the financial system. Why would you want them here?
Exactly. People are like, we want these crooks in here to continue to manipulate. If they're not manipulated enough, do you really want more manipulators in the Bitcoin and cryptocurrency markets? Not really. No. Is it going to happen? Yeah. Well, yeah, it probably is.
Of course it is.
I mean, when futures launched early 2018, we could see the impact on Bitcoin as a whole, or December of 17. Oh, yeah. I'm not sure exactly when it launched. I mean, and that would be exactly what we're talking about. It was detrimental to the space as a whole.
We all think we knew it was happening. What was that, Tom?
Think about how the clients there, the analysts who say we're going to allow the wealthy investors, invest into Bitcoin, into Ethereum. How do they come across to the wealthy clients and investors who have millions, if not billions, at their disposal, to get into Bitcoin? These clients must be thinking, well, hold on a second. We've done our analytics here. Bitcoin is the best performing assets over the past year. We've gone into gold, we've gone into the stock market, but I want to make more money. That's at the end of the day what these institutional investors want. That's what most of us want at the end of the day, to make some money.
Tom, you're 100% right. Yeah, these guys don't know their private keys from their private parts.
Well, that's true, man. They definitely shouldn't be messing with any private keys. These investors are not necessarily savvy investors. That's why they let crooks like JP Morgan and Morgan Stanley and Goldman Sachs and all these other institutions manage the money for them, because they just simply don't have the time or really the acumen to be able to do it accurately. So good luck in crypto. I mean, that is like that is like the foundational part of crypto, is that you are now your own bank. You're managing your own funds. It's up to you. Yeah. There's no FDIC insurance. There's nobody that's going to hold your hand except for Stache. Stache will always hold you guys' hand. But that's how it goes.
Get rid of it.
Yeah, get rid of those third parties. Exactly.
We are all for that. As guys who've been, in the space for a while, let's do that. All right. Next question. It's all about the same kind of stuff. Rice, I want to start with you on this one. And this is just maybe for my own curiosity, but they opened up this fund. Why in the world is Bitcoin Cash or ETH Classic in it?
Oh dear, that's bad.
Well, I mean, I was going to hold this for the Ethereum stuff, but I was actually going to suggest to Ethereum Classic that they should upgrade to the point of the London hard fork, and just basically have the Ethereum Classic be like Ethereum was prior to the fork. So that way there's something there for the miners. And also, I mean, there's a lot of argument as to what is the real Bitcoin. Now, obviously, Bitcoin is the real Bitcoin, but there are forks of Bitcoin that seem to perform more like what the white paper talks about. So for them to be forward thinking in those elements.
Heresy.
Also, another thing too is Roger Ver. He's been one of the biggest investors in the crypto space, so I'm sure that that's taken notice of those kind of institutions.
Mhm.
So maybe there's some sort of collaboration with Roger involved with the traditional financial system. I'm not sure, but and it's also, you know, in the top 10 as well, I believe, is it not? That's the last time I haven't really looked at where Bitcoin Cash is lately.
Let's
But,
see. Bitcoin
no, it's
Cash
fallen.
coming in at number 14.
14, yeah, it's fallen down. So, but it's still in the top 20, top 15. So I mean, it still puts it in a good position. It's still got a lot of eyes. Most people are going to be going to CoinMarketCap and CoinGecko, your coin aggregator sites, and that's where people are going to be seeing information, and they're going to be looking at the top coins. So those top coins are always going to get a little bit more attention. So it makes sense in that element.
All right. Stache, what is your reasoning and thinking why they would put ETH Classic or Bitcoin Cash up in there?
My reasoning and my thinking behind that is that they're morons. I mean, what I mean, really, is there really a reason? I mean, come on, man. Ethereum Cloud, the thing has been 51% attacked more times than I can count, man. I mean, when you talk about security of a network, that's pretty much one of the major factors that we want to take in consideration for putting millions or even billions of dollars into something. Why would you want to go with something like ETH Classic, where, you know, they've had those problems time and time and time again? Now, as much as I'm not a fan of Bitcoin Cash, really, I see that as a more viable option than I do Ethereum Classic. I do like your idea, Rice, though, about upgrading ETH Classic to being right at the London hard fork and then leaving it there so it stays as a proof of work coin, in contrast to Ethereum 2.0 and you know, Beacon, when that's all combined together, and that goes to proof of work. Proof of stake, and the other one stays as proof of work. That's an interesting concept. But why they
it adds a lot more. It adds a lot more workability too, I think, too.
It does. It does. Yeah. So I mean, that would give some viability there for it, I think, in the long term. But really, you know, with the problems that it's had and the lack of real adoption and use that we've seen with Ethereum Classic, and then same thing with Bitcoin Cash. Like, you know, there was a really big play for Bitcoin Cash for quite a while there, you know, a lot of vocal people for it. And I feel like that has really died down. Now, chat, if you guys are listening and you guys are huge Bitcoin Cash fans, please put it in chat so we can see. But I have a feeling that there's just not a lot of people out there that are like, oh, Bitcoin Cash, it's the best. It is the real Bitcoin. Like, that was a narrative for a very long time. And maybe these institutions are just, you know, they're just barely getting wind of some of these things. And they're maybe a year or two behind in what we know what's going on. You know, crypto Twitter stays quite a bit ahead of the competition. So maybe that is, maybe they don't know that there's been 51% attacks, and they're just like, hey, this is great. Look, it's Ethereum Classic. It must be amazing, you know?
You know, you got
it
all
says
the people.
Classic. Anything classic is always good, right?
Gotta be good.
Yeah. Hey,
we're classy guys, and we love classic.
Lay's potato chips. They are classic, but it's not my choice.
Yeah,
of chip.
right.
Tom, same question goes to you. What do you think would be the reasoning for Bitcoin Cash or ETH Classic to be added into these funds?
I don't know. I don't know what they're really on about here. I mean, by the way, I've had a few comments saying that my microphone's a little bit low. Can you guys hear me all right?
You sound good in my ear.
I hear you good.
All good? Yeah, you can hear me all fine?
Yep.
Okay. Yeah, Ethereum Classic, Bitcoin Cash. I mean, I've never really touched them. I mean, and hearing that Ethereum Classic has, or was it Bitcoin Cash, received a 51% attack?
Mm-hmm.
That's crazy. What, you know, so they're saying, oh, we're going to open up this fund, and all these wealthy clients will get into it, and we're going to open up to a fund where these coins will be there. It makes no sense to me at all. You know, look into coins and projects that have good teams, good white papers, that have a good roadmap, and, you know, that have also good future. This is exactly what these institutions are here for, looking into the analytics behind the project and where they're actually going to be going, rather than saying, oh, I've heard this is a good one, so we'll just add this onto the portfolio, and that'll be okay. That'll be good. And it doesn't help anybody at the end of the day. It doesn't help the clients who are wealthy and they want to make money on their portfolio or whatever. And it doesn't help us, the retail traders who want to get into the market and see Ethereum Classic and Bitcoin Cash get the light of day. That's when others deserve a lot more of attention. Do you see what I mean? So it's one of those ones where I really don't get it. And I think there will come a day of reckoning where, you know, there will be a person who is on the crypto Twitter, hired by, let's say, JP Morgan or something like that, and you know, who's really tapped in, you know, finger on the pulse of what's happening in the crypto space, especially right now. You know, they're hiring people who have had, I don't know, I'm just assuming here, but I'm assuming that they've hired people who've said that they've had some experience in crypto, but not as much as we have. So that's that's the point I'm trying to make there, is that there's a difference in experience here at the end of the day, and it shows really. So there you go.
I think that's a great point. Go ahead, Rice.
I want to just add, I mean, there's a lot being built on Bitcoin Cash. I mean, I do like Bitcoin Cash. And if you go like on the Bitcoin wallet, bitcoin.com wallet, there's a lot of services built into it to make it really easy for people to be able to utilize their crypto rather than just hodling the crypto as well. So just to say, they are building, even BSV was building a lot of things like the Twitch application. So there were some use cases and some really cool things that were being done with it versus just being a decentralized cryptocurrency.
Good point. Good points. Nick, if you were a wealthy Chase investor, would you invest in either the Bitcoin Cash or Ethereum Classic? Maybe you don't know, and you're saying, yeah, give me the Classic. Give me the cash.
Yeah, I mean, if I was a wealthy investor, I would want as much exposure to different coins as possible. If I know nothing and they're like, hey, here's this new asset class that could be incredible, like, yeah, I mean, it would make sense. But so I got into crypto as a miner. So right now in my house, I have like 18 graphics cards and a couple ASICs all mining away. And the interesting thing with Bitcoin Cash, and this was something I was talking to Ben with about the other week, is Bitcoin Cash is like, it's not a bad blockchain, and it's fast. It was on the block size wars, and they went for speed. So, and then regular Bitcoin stayed with store of value. So Bitcoin Cash has a good foothold, or at least it's well known in the APAC region. And APAC is kind of gonna be the next adoption horizon for blockchain and cryptocurrency, because it's really big in the Philippines. There's a ton of remittances going back and forth. Axie Infinity is paying people's rent in the Philippines. So there may be something with Bitcoin Cash, and all it could use is just a rebrand so it can stand on its own, and then it could actually have legs. So there could be an angle there, like really, really long term. Ethereum Classic, I know everyone likes to poop on it, but look, IOHK is developing Ethereum Classic. So as long as IOHK is into it, and it's doing improvements, it just had its Magneto hard fork, and yeah, it has problems. I think 46% of its hash rate is in one pool right now, and that's not good. But 60% of Bitcoin's hash rate was all in one country that has the worst government on the planet. So I don't want to hear about hash rates being front loaded in certain spaces. It's not good. So, but that doesn't mean that the project is illegitimate. So I think Ethereum Classic can find its footing. But look, if Charles Hoskinson has any sort of hand in a cryptocurrency, like I can't write it off. I also mine it, and it's done really well for me. So that's cool.
Yeah,
I like this
that's
dude.
great. I agree with that as well. I mean, just to jump in there. I mean, I want to see funds saying we're going to be investing in Polkadot or VeChain, Zilliqa. These are great projects, and I want to see these people, these institutions say, hey, we're going to look into these projects which are solving real world issues. And I think that's something I want to make sure that I said there. So there you go.
Awesome. Well, I'm going to move over to the next topic, but I was looking at some notes, so I missed giving you a point there. So there we go. Thank you, Frank, for adding that one in. All right, let's shift over to blockchain social media platform. Finally sees some big movement. Now, this is about the audio streaming service Audius. So they now got 5 million monthly users on the platform. They've got more than 100,000 artists using the platform. Most of them are smaller to medium size. Now they got a couple of really big names. You got Deadmau5, Weezer, and Skrillex. Some decent sized names. Now it does run on the Ethereum blockchain. Let's see. Rice, I'll start with you. Have you ever streamed any of your shows to a decentralized platform? If so, which ones do you use?
Oh, well, okay. So when you talk about decentralization and social media and content sharing, that's a completely different game because a lot of times when you're dealing with websites and things like that, you are actually dealing with centralization.
Right.
So I'm not really sure, aside from streaming on Library, what platforms that I've been on that have been truly decentralized in those aspects. But as far as blockchain technology disrupting industries, I mean, 100% this is going to be coming. Going to school for business administration, I learned about the term creative destruction, and people can look it up, but it's an awesome business term, and it just means getting rid of obsolete, antiquated technologies moving forward. A good example is like how music has progressed from a record to 8 tracks to a cassette to a CD to MP3s to streaming. So I mean, that's all forms of creative destruction. And when we talked earlier about middleman and third parties and getting rid of these intermediaries, there's a lot of industries that need this, and it gives the power back, especially when it comes from a music element. And Stache can completely agree with this. I'm sure when you're dealing with smart contracts and you can actually pay out, like for example, selling a single and using it NFT, you can have the smart contract programmed where it will actually pay out. We talked about this before, but it'll actually pay out to everybody right on the spot. And you could program it to where the X amount goes to the engineers, X amount goes to the songwriters, performers, or whatever the situation might be. And it gets rid of that middleman because when you look at a lot of what's going on in record industries, it's the artists don't make money until they get to a certain point. And it really takes a lot of record sales and a lot of singles and a lot of digital sales to really get to that point, because it's all a loan. And you've got to repay that loan plus a lot of interest and then selling over your rights in the meantime. So a lot of your electronic artists are going to be forward thinking. I didn't know Weezer was in this group, so that's really cool that they're in this, but I would definitely expect your Deadmau5s and your Skrillex to get involved. And it's really awesome that Audius has crossed over a total of over 5 million users for a blockchain-based service. So, I mean, congratulations and kudos to those guys.
Yeah, I mean that's a pretty big number. Let's see, Stache, do you think it's possible for any of these platforms to ever dethrone YouTube? Now, this is obviously audio streaming, so like I think maybe we should compare it more to like a Spotify or Pandora,
yeah.
or like Pandora, you know, something like that. What do you think? Do you think a service like this has the chance to overthrow the big name player with the market share?
Yeah, I mean, you're right. The difference between video and audio are pretty large. I think that, you know, a platform like Audius, it does have actually a pretty good chance of dethroning something like Spotify. We see that evolution or that you know, competition a lot more often, right? We've seen audio platforms transition and go from one to the next of what's popular very quickly over the last 10 to 15 years. And we really haven't seen that with video. You know, YouTube has been the dominant video platform since video became a thing. So I do think Audius has actually a pretty good shot at doing something like that. There's been lots of others that have tried, and that's one of those big things, is you never really know exactly what's going to hit, because it really does have to take advantage of a new technology that makes audio streaming or audio as a service more convenient for people, because that's what they want. People just want to be more convenient. They don't want to be hung up by, you know, having to own certain devices or certain cords or certain whatever it may be. And so the easier you can make it for people to get what they want in a product like this, in particular music, something that people are very passionate about on both the creator side and the listener side, it makes an environment so much easier. And right now, you know, the industry has done a really good job, or I mean, a decent job of making it really easy for the user, the end user, the listener, right, to be able to you know, ingest this content easily. That's why we have Spotify's and Pandora's, and it's like, oh, it's so easy, and like Apple Music, and it's just like, oh, I just stream it. I don't even have to own any devices anymore. It's just right there on my smartphone, all the things I ever want. But what's happening on the backside of that is all the creators are getting screwed. And that is for sure 100% happening. I've been a musician my entire life. I've worked in the music industry. I've seen every aspect of it, being a musician and also a producer and an event coordinator for large music festivals. And so I see what happens, and all the middlemen they're getting their grubby little paws into all these musicians' pockets, and it's disgusting, man. And so, you know, that still persists. So whereas, you know, the listener sees all these great services they're getting, and they have all this access to all this amazing music, and they're finding people and bands that they've never heard of that are amazing, that they love. Well, you know, those people are getting paid pennies on the dollar for their streams and for their music and for their talent and their creativity. And so, you know, I hope that something like Audius is going to help with that, because, yeah, it does. It's a more direct to the creator's platform. And it's not what Spotify is, and that's not what Pandora is, and that's not what most of these streaming services are. You know, they're still working with the record companies and these big you know, conglomerates that have a monopoly on the industry. So, you know, and that's a big thing too, because you know, you're not only fighting against other large corporations like Spotify, but you're fighting against the record companies, the people who want to keep the paradigm. They want to keep the paradigm as it is. They want to keep the status quo because that's what keeps them in the dollars. That's what keeps the money flowing in. But when you have platforms that are decentralized like this, that put the power back to the creator, and you have a more direct, listener to creator connection, then that cuts them out, and that makes them very worried, very nervous. And that is what something like Audius can do, is where they can allow creators to really have the tools they need to connect directly with fans, and then be able to get the money on the spot instead of waiting months and months and months for them to get a check from a BMI or an ASCAP or Atlantic Records or whatever it may be after, and then they get pennies, and then the other people are taking 80 to 90% of the profit. So I'm really confident in the fact that blockchain and NFTs can really help with the music industry in particular. And that's not to say what they can do, with social media and video platforms too. So there's a lot there as well to unpackage.
Great point, Stache.
Yeah, that was great. And I love the fact that, you are a musician. And so I look forward to seeing your band on Audius soon, right?
Yeah, we got a new album dropping later this year in probably about maybe 2 months or so. So it definitely will be on Audius and other decentralized platforms for streaming.
Awesome. Tom, do you think 5 million monthly users is an actual statistic, or do you think they're fluffing that to make it sound a little bit better?
Well, there's probably some jiggery pokery going on in the background, but I think it's fairly good to see what's happening. I think I completely agree with Rice and Stache on this one. This is good to see. It's encouraging. I haven't been in the music industry myself, but I have heard many times before that it takes like 1 billion streams or something like that on Spotify, to make a lot of profit. You're loaned a certain amount. So when a new artist is signed to a label, they get, let's say, $1 million to $10 million that up front, and they can spend it how they want, but they've got to make that money back. So they're already $10 million in debt, or whatever it may be, a large amount of debt. So they have to repay that, and then on top of that, the music they put out is not as much. So it's crazy. So I think something like this that is decentralized, that is in this space, I think is really good. It's encouraging, and I think what will happen is, especially with these reportedly 5 million users, what we could see happen is, if it does get big and big enough to compete with the likes of Apple and Spotify, is that they will compete, and then they'll probably get bought out by one of them. Probably, we don't know. But this is how it has worked in the past. Instagram was nearly as big as Facebook, and then Facebook bought out Instagram. We've seen it many times before in the past. I think Apple with Beats, Beats by Dre, they got really big, and then they bought out Beats, and they've slowly decreased Beats' market share. So that will probably be the lifespan and the life cycle of it. That's where I think things could go with this. So more monthly users and better adoption of it. That's great to see, and you want to see that. I think more power to the artists. At the end of the day, they need to have their time and their light. Because there's so many middlemen out there, too many. And that needs to be, and blockchain does solve that. Blockchain really does solve that. So to see this happen, especially in this sort of world, especially this sort of time, as we're getting out of the pandemic, this is really interesting, and I think it's really good to see. So I'm a big supporter of it.
Awesome. So, Nick, I'm going to come to you with the next question. Play something off of what Rice said earlier, where he said, truly, most of the time, especially with these services, they might say they're decentralized, but if they're web-based, they're centralized because they have to be hosted. And I think that's what you were alluding to, right, Rice? Where, most of the time, these sites, they're on Amazon Web Services, so it truly isn't decentralized, even though, we're trying. Do you think that platforms like this could actually go decentralized, or do you think we're always going to need a certain level of centralization with these kind of industries? As far as putting curated content and music and NFT style stuff on their platform.
Was that to me or to Rice?
That's to you, sir.
Good. Look. So yeah, and that is kind of that's kind of the P and the Cheerios of the whole decentralized thing. It's your $1 million NFT maybe an ERC20 token or whatever the heck, and that's decentralized, but the actual asset is sitting on Amazon Web Services. So that's not great. It's really about ownership and responsibility. So we learned, the music industry learned back, when I was coming up in 1999, 2000 or 98, people just wanted ownership, and so Napster kind of exploded because people wanted to have it. And now artists want more and more ownership because they know they've been getting the pointy end of the stick for the past forever. So if Audius can come out saying, hey, we're giving the artist more ownership, then you will see more artists come to the platform. And at that point, you can develop more because you're getting a lot more traffic, you're getting a lot more money. And then you can encourage the artist to say, like, look, we're not going to be contractually obligated to hold on to your stuff. You need to put it up on a blockchain like Bluezell or something like that, like one of these storage blockchains, so the asset is on the blockchain. And so at that point, you're really actually decentralized and you can start really innovating. So I mean, there's big time money behind Audius. Let's not joke ourselves. These aren't just some guys in the basement. There's people from Twitch involved. There's people from Electronic Arts involved. So this is a big time play, and they may be looking to get bought out, but I don't think so in the short term. But like I said, if they can prove not just decentralization but empowerment of the artist, you bet your butt that artists are going to flock to it. And it's just the same thing with SoundCloud. SoundCloud was very hands off. And look, and SoundCloud is like the place where the hottest jams go. And Spotify is similar. They give a little bit more to the artist, not as much as, they should, but it's better than signing with, Sony BMG. Because with Sony BMG, you're essentially just an indentured servant for the rest of your life. And really the only way these bands make money is by touring. And Stache backed me up. So like when you play live, that's the only way you can actually pay the bills and pay for your kids to go to school and all that stuff. If you're a musician,
that's changed a lot though with the 360 deals, because now the labels are actually getting money off the touring and merchandising revenue that they did.
Well, because they knew, because they're right, and see because they're greedy. They see that the artists shift to doing touring and selling merch, and they're like, oh hey, by the way, in page 56 of your contract now, that we changed when you weren't looking, you were on tour and you were super tired, and we had you sign anyways. We now get a piece of your touring and merch. So screw you.
Exactly.
So yeah, you're right. I mean, they keep trying to find ways to stay in there.
And that's exactly why you see bands or groups like Run the Jewels completely go bypass the entire system. Like I'm on their email list. They email me their new albums when they come out. Like I get a zip file. Yeah. Like that's how they work. So that's how ownership works. Like they own the masters of the master recordings of all of their stuff, and then you get a high quality download. But the way they make money is through touring and merch. Yeah.
And I think the less we see of that, the less we see of the ownership, I think the more we'll see of the artists really showing what they can show to and make to the world. And the less we see of that, I think it would be better for all of us really at the end of the day.
Real quick, I want to add in, man, like if you think about what we just talked about and how much this could disrupt the music industry, think about applying this to the financial sector, travel, healthcare, retail, supply chain, education, the whole entire entertainment industry. When you think about all these different industries that need this kind of disruption, what kind of an impact it's going to have, and giving the power back to the creators ultimately.
We're all, that's one of the things that we all look forward to, is a great platform that gives it back to the creator, because ultimately, you're the one spending all your time doing this. Yeah, that, they front the bill to build the platform, but giving it back to the creators is the ultimate goal, I think, for every one of us.
Here's the killer thing with Audius. If we can see Audius and Patreon kind of mingle that's some real stuff right there. Like Patreon is direct to artist support. So, and that's ownership. That's direct ownership.
I would add Anchor, because Anchor's doing like a Patreon type, MP3 type streaming.
Yep. OnlyFans plus Audius equals love. That's how
I knew you were going to go there, Stache.
Someone was going to go there.
Yeah.
I do want to move to the next topic, because we're getting close to the end here. But I know that this NFT stuff is pretty important to you guys. And one question about this, and whoever wants to start with it, Stache or Rice, whoever between the two of you, do you think that some of these other platforms are going to have to start offering NFTs to the creators as royalties to kind of stay relevant, if Audius is going to do that on their platform?
It doesn't have to necessarily just be. I love NFTs, but it doesn't have to necessarily be an NFT. It could be just any sort of digital representation as well. I mean, there are platforms like Raven.
You're right.
So I mean,
but it's cool.
NFTs would make sense. Yeah, it's totally way cooler. I agree. And I love NFTs, but it doesn't have to be limited to an NFT, just because an NFT is also a digital representation. So you can have an ERC20 token that represents the same thing that the NFT represents, if it's just a representation of something.
Yeah, I agree. Yeah, I just think it would be cool to do that. And I mean, that's what people like when you're talking about the entertainment industry. People like things that are entertaining and fun and cool. And so, I do think that is going to be a pretty big part of these entertainment economies. We're already seeing, major companies like Paramount Pictures that are coming out with NFTs to support their movie releases. So you talk about this competition, and like that's that's where the trend goes in entertainment. So goes the money. So goes everybody else that wants to see these cool things because they can, use the technology.
The Kings of Leon, their last album, the full album itself, was released as an NFT, right?
I believe.
Yeah, and they had a golden ticket that came with it too, which allowed you to be able to get into any of their shows. And Blau did one like that too. And so, these creators that have been taking advantage of NFTs right now to be able to give more access to their fans, and it's working out beautifully. People love it. Now there's low adoption at this point, but it's always the innovators who are going to benefit once these technologies take off.
And I think it's fun and exciting. Yeah. I mean, this is new. This is new. We haven't seen something like this before. Most of the time, we've been getting used to just, okay, an artist released on Spotify, we download, okay, that's about it, and then we listen, and that's it. I think we have more interaction, especially in the world of the internet age and everything like that, especially as we're entering the fourth industrial revolution, which is huge. And we're getting technologies like this as well, harnessing that and taking advantage of these technologies for the greater benefits of humanity, I think will help artists achieve what they want to achieve and make it fun for everybody. It can be a lot of work to set something out, make an album, put it out there, but also have fun with the audience and interact with them as well. So a lot of really cool stuff's going to come out of this, in my opinion.
Awesome. All right, let's move on to this last question before we end it for today. This one's about Ethereum. EIP 1559 went live yesterday. Obviously, with the rollout, we saw tens of thousands of ETH burned every minute, which is crazy. And Vitalik, he's confident in where we're going as far as the next phase for the network goes. Let's see, Nick, what are your thoughts on EIP 1559 now that the dust has settled?
I mean, overall, it's going to be great for the short term. I don't think it's a panacea by any stretch of the imagination. Unfortunately, Ethereum is still, it's going to see even more adoption. So I think it's going to be slower, especially if they don't really kind of appease the miners. In the meantime, you've seen, competing proof of work coins jump by like 5, 12, 30% in their difficulty. So a lot of miners are jumping ship. And so that's going to affect the network speed. But, ETH 2.0 is still like far away. Just because Vitalik feels good. And look, I'm glad the London hard fork went through and nothing bad happened and it was all great. And that's why we're pumping, like, because it's solid, which is a change of pace for Ethereum when they release something new. So that's good. And that was very confidence boosting. But, I think staking on Ethereum is still a ways away. So there's going to have to be other EIPs to increase network speed and lower gas fees, like really, really fast. This one was good, but they need to announce another EIP like next week.
All right. Let's always keep moving it forward. Let's see, Tom, will Cardano beat ETH when it comes to going full-blown proof of stake?
Oof. I from what I've seen so far, right now, yes. With this, I made a video on this actually today about Cardano, just talking about the recent updates that's happening with it, and it's looking really good with its smart contracts and DeFi that's coming out for Cardano. It's making it more competitive to Ethereum when you compare Ethereum and Cardano together. Cardano looks like it's going to come out on top with this one here. But we talk about Ethereum 2.0. That's not happening tomorrow. It's happening, I think, years down the line at this point. They said it was going to happen next week or this, or that. It's just not happening. So I'll believe it when I see it. That's what I feel when it comes to that. But the EIP 1559 was really good. But as Nick said, we need to see an EIP where it lowers the gas fees. EIP 1559 only made gas fees more predictable. And it has made it a deflationary model, which is good to see. But we need to see lower gas fees. And again, I'll believe it when I see it. But right now with Cardano, it's looking really good, in my opinion. So
excellent point. I share what you feel there. Stache. So Vitalik's confident. Do you share his sentiment?
I mean, I think that he's confident because he has to be. right? What if he said, you know what, guys, I'm not, I don't know, man. I don't know if this is going to work. I'm not very confident in this, like he has to be, right? So what else do you expect him to do? Now, with this upgrade, I think that there are some good things and some bad things. Just really quickly, good things, more predictable fees, right? They're not lowering their fees, they're just more predictable. Good thing. Bad thing is that it's not really good for miners. Okay, that's not good either. Also, something kind of in the middle that a lot of people don't really realize is that while this does make Ethereum deflationary in its way, is that what we really want? Because what that means is that, the difference of having an inflated currency or a currency that has inflation means that, it is something that is more liquid in its spendability, right? But if we go to a deflationary mechanic like what Bitcoin kind of has, where Bitcoin is a deflationary mechanic, but it has a cap, right? Then it becomes more of a store of value, and people are going to be wanting to spend Ethereum less and less because there is now, there's essentially going to be kind of a cap on it, right? So I think that could in the long term not necessarily be the best thing. And like everybody said, we're very far off from 2.0, and the biggest problem is not being solved by this improvement protocol. So I don't know why he's so confident, but like I said, I think it just kind of has to be, and I guess we'll eventually get there. But I could definitely see other protocols like Cardano in particular or Polkadot coming through and really just smashing on it, because Ethereum just cannot get it together and get scaled.
Absolutely. So my last question is going to come to you, Rice. It's basically what Stache just ended with there. So if ETH 2.0 rolls out successfully, will any other protocols be able to catch up, or do you think ETH is just going to reign supreme? You're muted, just so you know.
My bad. I apologize. I do that to make sure none of the other noise comes through.
All good.
I really feel like, regardless of how successful ETH 2.0 is, there's still going to be competition. You're not going to have one blockchain that's going to do it all. And then you're also seeing a lot of these projects that Stache mentioned that are also basically building bridges to Ethereum with the EVM and stuff to that effect. So everybody's working on interoperability with Ethereum. You have the Ethereum Enterprise Alliance, which I mention every time we talk about Ethereum, which almost makes it, in a sense, too big to fail. Because if you look at all the different companies, organizations that are involved with the Ethereum Enterprise Alliance, it's insane. It's the largest conglomerate that we've ever seen in the history of the world. And it's major companies, and they're investing into Ethereum. Now, if there's something really bad that happens, maybe they may start trying to look into other elements. But I don't see them jumping the Ethereum ship and getting rid of the Ethereum Enterprise Alliance and forming a Cardano Enterprise Alliance. Not saying it's not going to happen, but I definitely feel that Ethereum is going to be the most successful, but I don't feel like they're going to necessarily be the be-all, end-all. I think you might see some of these chains that are trying to specialize in certain things as well, which will give them a little bit more of a different kind of an edge above some of these other platforms that are just working in generalities as well. So, I mean, and as far as Vitalik being confident, I don't know if it's him just like trying to put a game face on because of all this competition. I mean, for someone his age, all the stress that kid's got to be under is insane. He started out being very anti-bank, and now he's working with the banks. So I've seen a lot of progression with him. But again, Ethereum is not Vitalik. Vitalik is kind of the face, but there's so many other people that are involved with building Ethereum and making it what it is today. He's just the figurehead, if you want to put it that way. But I definitely feel like there's going to be a bright future for Ethereum, regardless of the miners or anything like that, because you still have the argument whether or not there's any legitimacy to it about the energy consumption, and that's still going to be utilized, and it's going to become more of a talking point as well.
Awesome, man. I'm gonna give you one final point there. That brings us to the end of the point gathering on this wonderful Friday. Stache, you won, man. Cue the confetti.
Shout out to the apostrophe.
Yeah, well, he didn't get it. It wasn't in the budget for today. Couldn't do the apostrophe, but
that's why I had to shout it out.
There you go. All right, Stache, we'll give you your parting words for today. Congratulations on the win. Had a great time chatting with all you guys, by the way. This was a lot of fun. Learned a lot from you guys, which was really cool. But Stache, what do you want to leave us with, man?
Thank you.
Just want to say thank you guys for always supporting me, and go out and support your creators out there, your musicians, your independents, people who are out there trying to make life better, make my life more entertaining and more fun. Support people directly. That's one of the great things about cryptocurrency, what we can do here, and so people definitely appreciate that. Musicians and artists and our fellow creators here. So love you guys. Mustache love. See you on my live streams and shows later this week.
Awesome. All right. Well, that should do it for this week here on Around the Blockchain. Don't forget to hit the like button. Go down to the description. Follow all of their content. Like every single one of your videos. That is your homework for this weekend. And we will see you here Monday on BitBoy Crypto. Have a good weekend.